This is going to be about Bill Williams' awesome oscillator. It's included with the platform. I'm sure you know about all that. It compares the 5 moving average with the 34. It's a momentum indicator. If you wanted to compare the 10 to the 20, you'd have to rewrite the indicator. That's not that big an issue. Bill Williams claims to have a lot of success with it, and other people do too. And I have some success, but I struggle with it sometimes. And that's what this is going to be about. The struggle and how I try to overcome it. It's not 100%, but it seems to kind of keep me out of the hot water sometimes. As I understand it, when the bars are going down, we're interested in sells. So you can see, that's easy to see. When the bars are going up, we're interested in buys. Easy to see. And that's kind of where the easy part ends. I have trouble in areas like this where it's buy, sell, buy, sell, buy, sell, like that, back and forth, back and forth. Same thing over here, buy, sell, buy, sell, buy, sell, like that. You kind of get tossed around a lot. So what I try to do, it's not 100%, what I try to do is find something that will say, hey, only in this stretch consider buys. Only in this stretch consider sells. In this stretch, look someplace else. That type of deal. One way to do that is using the QQE, which is based on the RSI, relative strength. When in this right here, these aqua and magenta X's, when the QQE is above its signal line, the X's are aqua. When the QQE is below its signal line, the X's are magenta. So, looking at this stretch right through here, we would not be interested in these cells because this is aqua. So you kind of filter them out. And if there was a whole bunch of blues, there's only one, but if there was, in this stretch you'd only be interested in sells. In this stretch you're only interested in buys, and so on. This stretch here you're only interested in sells, not interested in these buys. But notice the price is moving up, and that's, again, I didn't say it was 100% here. There is such a thing as divergence and that sort of deal. So the price may be moving up while the indicators are saying it should be doing something else. I'm sure you understand how that works there. Here again, 4-hour chart. It's another example. This was those magenta X's that we just looked at. There's those buys that we would not be interested in. And for some reason we sold. And actually I've been selling all day here, just about. Why was that? Well, these lines through here, there's 8 of them, 8 different indicators. When they agree, or the majority of them, maybe 6, 7, or 8, something like that, agree, and this agrees, the QQE and the awesome oscillator agree, then I'm more interested in selling. When they're magenta, aqua, and the awesome oscillator is blue going up, and this is aqua, I'm more interested in buys. And what that does, that kind of keeps you out of this back and forth, back and forth, back and forth. Another way to do it would be just to use the PSAR. I mean, you could see that if you took all the buys and none of the sells in this stretch through here, you would have done pretty good. You're going to get to points in time where one thing says one thing and something else says something else. That's when I start looking around. I forget that one. Here's yet another way. Same chart. No, this is a 1-hour chart. And it's a different pair too. AG is a JPY. You can see back and forth, back and forth, back and forth. The price was moving up, but the awesome oscillator was up, down, up, down, up, down. Well, how do we stay in the trend and keep from bouncing in and out? Well, this here in this deal, if all four are green line, I'm more interested in taking the blues, the buys. If all four are red, I'm more interested in taking the sells. And if they're, different, well, then I'm kind of just like before. I turn the page. Here's another one, GBPUSD. Pretty much the same thing. If they're all magenta, or the vast majority of them, and this is magenta, the awesome oscillator, I will take the sells only, not the buys, only the sells. And then if a case where, like right here, they're all aqua, well, then I would be taking, just say for instance there was a couple sells there, and there's not, but if there was, I'd ignore them. I would only be taking the buys. What's this? Oh, okay. Yet another way. Remember a while ago we had the PSAR, which is a long stretch. You can use something as simple as the TSR and only take the buys that agree with the TSR. In other words, don't take these sells, take that buy. Don't take that sell, take that buy. And now the awesome oscillator is losing strength, and that's the way momentum does. Momentum slowly dies, and it will slowly die until it just gives up. And about that time, now the TSR 89, that's the 89, that's going to be slow to react. Now for some reason it reacted pretty fast here, but usually it's slow. And when it does, you would switch to, or consider switching to sells only, where before you might have been only, in this stretch through here, buys only. But that's the awesome oscillator. And like I said, some of this stuff here I'll post a code on AnyVid site, earnforex.com. I'll probably post it in that thread, MQ4 works. And other than that, I guess that's enough awesomeness for today.